Ahoy there, traders. Hello, hello, hello. How are we all doing? Thank you, as always. Start with some appreciation. Thank you for taking some time out of your day to spend it with me and everyone else here today. So, hello, Colin. Let's see you got Friday off. Glenn, Jacob, Loy, Scott, Vito. Lots of the old names. We've got Duncan. Again, I'm just skipping down the list. If I've not said your name, it's nothing personal. Just skipped your name. But nonetheless, welcome one, welcome all. I recognize a new name there. Hello, Sean. So, welcome to our weekly workshop. We have a little look over my shoulder, and occasionally we talk about a few interesting things. I think it's going to be more practical, hands-on. I've not prepared a talking point, mainly because I couldn't think of anything new and interesting. So it's just going to be all the charts today. And the main focus is basically green light trading. This is the phrase that keeps buzzing around my head at the moment. It's how do we find something to trade now? We looked at this last week as well. Like, how do we find things to trade right this moment? And that is the big thing that I'm a fan of. Like, I don't want to spend all day looking through chart after chart after chart. It's very easy to fall into that trap, and especially at the moment because some of us have got nothing to do. We can't go anywhere, we can't do anything, we're locked down. So it's very easy to fall into the trap of I'll just stare at the charts, I'll just zombie out and do this. So I never want to do that, and I think it's more important now than ever to not fall into that trap of I've got nothing else to do, I'll just spend 7 hours looking at charts. I've done that in the past. So right now I just want to look at things that are most interesting. So that's what we're going to focus on again today. We're going to look at a few different ways. My main focus is right now is I've blown the dust off my old day trading strategy. We've got that in the main members area, the how to trade gapping stocks. I've condensed it down. So it's a similar version of the main strategy, but it just means that I've got some extra restrictions and I want to find maybe 3 or 4 things that we can trade today for that. Now that we're post-election, we're going to have a look for some swing trading stocks and see if there's anything that's looking interesting. And the other strategy that I've got on the go at the moment is, I refer to it as Theta Burn. But essentially, that's just my fancy way of saying we're going to get paid to do nothing. We're going to sell junk options to someone else that thinks this stock is going somewhere. And we get paid for waiting. So it's usually referred to as an income type strategy. We're taking advantage of the way that options are priced. So we're looking for things that are ready to go, go, go. And we're looking for stocks that are, we don't care whether they go or they don't go. As long as they don't, we'll be fine. So that's what we're going to look at today. Green light trading 3 different ways. So that's our usual agenda. So we're going to spend most of the session looking for stocks. So again, 20 to 30 minutes at least, and usually up to about 60 minutes. We're going to have a little look at the market overview first. We've got a few stocks to review. I've not done it the last few weeks, but we've got a few interesting stocks to look at and just have a little look at the after action report for some trades. And we're going to look at green light trading, as I mentioned. So if, again, just skipping down the names, again, if I see there's a few new names just come into the room while I've been doing my little preamble. If today is your first day and it's the first time that you're here with us, thank you again for spending some time with me today. I am not a Wall Street guru, never have been. I don't proclaim to be. I'm just someone who's figured it out. I did it the hard way, if I'm going to be honest. I spent the better part of 12 years doing what I said I don't like doing anymore. And this is the reason why I don't like doing it. I spent 12 years looking at chart after chart after chart, doing all things the wrong way. And it's not pleasant. So I want to do it the opposite way. I did figure it out. That's the good news. And these days I like to not be spending time at the computer. My idea of a good time is reading a book, having a coffee, and maybe enjoying some cake. That's what I like to do. Quick about me is I've been trading full-time since 2001. I was hand-drawing charts in the early 90s, been calling all my trades out in real time since 2004. Again, all the laundry list of things that I've done is there. I specialized in Forex for 12 of the last 20 years. Right now, I specialize in stocks, options, occasionally a few futures trades, but that's what I've been doing for the past 10 or so years. Mentored and coached thousands of students all around the world, from hedge fund traders, owners, banks, institutions, all the way down to the real people like you and me, who are probably more important. I've got a lot more time for regular folks, retail traders, essentially, than I have for the institutions. One thing that is consistent and has been consistent over the years is I am obsessed with helping you replicate what I do so that you can see your own measure of success. I've got a lot of time for serious traders, as most of the old hands will tell you that's the case. Anyway, without further ado, let's get into it. Green light trading. Let's go and look for some stocks. Right, so this is the S&P. Typically, I start off with futures. As always, my attention is drawn to the markets. I have a tab on my watch list that just allows me to look at the futures, and then I've got the ETFs of some of the main markets. And what I'm looking at more than anything is the percentage of movements. Has anything interesting happened overnight? We've got about 30 minutes before the market opens. Or opens rather, and sometimes we'll see some big movements, some small movements, and we can see that we're effectively unchanged. So no major surprise there. Following on from last week's comments, one of the things that we were looking at was, or the scenario was, further sideways, and that's pretty much what's happened in the last, since last week, the last 7 days. And there was possibility of a slight bearish bias because we are, or potentially, moving back into this consolidation. So that was the scenario that's still on the table. So we were looking for at least a week of sideways movement, and that's what's happened. It's been pretty quiet as things go. Now, the next part of this, the scenario was after that, 1 to 2 weeks of sideways, and maybe another week of sideways. We could start to see some downward movements. I would imagine if we are going to see it, it's going to be at the start of December. So we've still got around 10 days to the end of November. November historically is a bullish month. We've already had that bullish movement. So, are we going to see more? We may see more, but I do think it's going to rest for the moment. And that's pretty much what we're seeing, broadly speaking. Dow is looking similar. We are above the range, possibly moving back into the range. So there's a little bit of a slightly different viewpoint here, where we're still holding the prior range highs. Nasdaq's a little bit different in that it hasn't made a new high post-election. So one of the things that I am looking at here is I'm more neutral to bearish on the Nasdaq. And again, if you've been looking at the news and been seeing headlines like sector cycles and sector rotations is probably things that you've been seeing, and that's just a fancy way of the money's moving out of tech and into more growth and value type stocks. That's generally what is being talked about at the moment, and you can see that footprint, if you like, unfolding on the futures market. The Dow and the S&P are trying to push higher. They're holding above this consolidation, whereas the Nasdaq is a little bit more negative biased. And again, broadly speaking, we're still neutral, so we're not really doing anything new for the moment. Doesn't mean that this can't take off like a rocket. It just means for the moment, nothing new is developing for me. The Russell is probably one of the most exciting charts out there. If you look comparatively, it is trending very nicely. We've got that same post-election sideways, but if you're going to be bullish on something and you had to put a trade on one of the indexes, I think it would be Russell, which is quite surprising, but nevertheless is showing a lot of strength. Looking left across the chart, we're back above pre-COVID levels, and we have been for a few days now. So this is causing, again, you will see in the news, the headlines, the media is talking about this as something that's quite interesting. And, middle America essentially is how I usually refer to the Russell. You got the two, and really one of the reasons why I like to focus on the Russell and maybe give it a little bit more emphasis. And again, I appreciate the stock market's not a representation of the economy. And again, if ever that was a true phrase, right now, that's the truest phrase ever. But the stock market listed version of the economy, it's 2,000 stocks. So if it's just a greater representation. And then when we look at something like the NASDAQ, it's only really 4 or 5 stocks that can move and ebb and flow and push that index. There's supposed to be 100 stocks in there, but there's only really about 5 stocks that are actually interesting. The S&P is closer. Again, these are all the kind of like the blue chip Goliaths. And again, there's only a small number of stocks that really drive the index. So when you go to the Russell, there's not a dozen stocks. There's not really the same 4 or 5 big stocks in that index that could lift the whole index. So everything has to be moving because it is granted a weighted average, but nonetheless, it's an average of a large number of stocks. At the last count, it's not quite 2,000. I think it was about 1,800, the last count, but nonetheless, there are around about 2,000 stocks in there. So it's quite interesting. So it's looking good. By the dip territory, we've got a small pullback. Price is holding the top 20% of its rolling range. And again, ultimately, it's looking very interesting. If you wanted to draw that rising channel, you could argue that you've got the range there. It's just sloping rising channel, breaking to a new high. So again, if I was going to play something, it would be that. Despite that, I do like the NASDAQ. It's tried selling off. We've got that bearish V-shaped pattern there, but we've also got this smaller one. Let me zoom in so you can see what I'm seeing. So what I'm looking at, if this is the big range here, I'm looking back to the small range over here. So we're at the midpoints. This is a little bit of chart reading 101. So if we go below that apex right there, then I don't see any reason to expect a move down to the lower points of the range. So I'm looking over here. So what clues do I have again? We're not at the lower end of the range, but we are stuck in the middle, which is, again, a very clear price has stopped here multiple times. So what we have is that rally and pause here. So that's what we're seeing here. So imagine if this, although it's the middle of the range, just imagine that's clear barrier points. It's pushing off and rallying, it's pushing off and retracing slightly, just pausing briefly. So if price went above there, that could be an early indication to a bullish breakout on the NASDAQ. So it is possible. So that's just what I'm keeping an eye on. That's just one thing that I'm catching my attention with the NASDAQ. It is a possibility that price could move higher. And that is reaffirmed when you look at stocks like Apple, where you've got this, again, that same type of pattern. It's just pushing high. If, price was to move higher, then it could be a nice little preemptive pop to signify a potential breakout on the tech. It's not in favor at the moment, so I'm not overly excited. It's just a one possible scenario. I'm still neutral to bearish, but things compared to last week, there was no indication of a bullish possibility or a bullish scenario. It was and still is the least likely scenario, but there was no clue to suggest any further upward movement last week. Whereas this week, the picture's slightly changed. It's starting to just round off again, just like we see here, where price starts to make those higher lows. That could be the higher low. So if we see that high there breached, then it could be the march upwards to the breakout and maybe a catch-up move. We have seen that on the S&P. Price is already above the highs there. So it could be interesting to see that catch-up move. So that's just one thing keeping an eye out for the moment. So viewpoints, neutral, bearish is the primary scenario still. That's not changed. But the NASDAQ is starting to give some clues as to, maybe there's a bullish move on the table now that money rotation post-election has calmed down somewhat. Maybe there can be some consistency because it's literally all come out of tech and all gone into other instruments and other opportunities. So with that said, what is what is a good opportunity? Let's take a look at my stock list. So how do we find, coming back to, where's my little slide deck? So coming back to a green light trading, how do we find now trades? So that's pretty much what we're going to go and look through. We're going to look for swing trades. We're going to look for income trades, and then we're going to look for day trades. In fact, I'm going to look for day trades first. Reason being is the scan that I use is time sensitive. We've got about 15 minutes before the market opens, and I just want to kind of show you and walk you through that process. So I'm going to look for day trades. So I'm going to go to my big universe of stocks. And just so you've got the the chart layouts, the daily is at the right here. 60 minutes is the left. I've got a 5-minute chart. I've also got the pre-market and post-market trading on the chart. So there's some different shaded areas on the 60s and the 5 minutes. So you can see the pre and post markets. So the way that I like to scan for stocks, so this is going to be for my basically opening trend. The morning momentum move is what I'm trying to capture. So things that are gapping are typically good. I'm looking for explosive opportunities. So the quickest way that I can find something to trade, I don't know if you saw what I did there. All I did was I clicked on my column header, just like I'm sorting a spreadsheet. I'm looking through about 350 stocks here. Again, not everything is moving. So I've sorted by the net changes of dollar amounts. So anything that's moving a couple of dollars could be interesting. And I can then say, okay, well, if they're the top moving, the top 10, top 15 stocks as a dollar movements, then I can then look at the volume for the day so far. And bear in mind, we've got about 10, 15 minutes before the market opens. I can start to zoom in on stocks that have significantly increased trading volume in the pre-markets. Now, if there's a more than, I usually say around 50,000 shares, but you could go down to, 2,500, especially when we're not in an earnings season, and especially when we're not seeing all this nonsense go on that we have done for the last 6 or 7 months in relation to the stock market. There's weird things going on just in the stock market, let alone before you look out the window. So I'm looking for around about 100,000 shares traded. Reason being is that's probably institutional money. Retail traders are not pushing that amount of volume. So I've got 3 or 4 stocks that I can look at there. I'll come back to them in a moment. Same thing on the dollar side. So one of the things that I notice is if I'm looking at the active stocks, there's more green stocks than red stocks, if you noticed. So broadly speaking, it's looking like the market's going to gap higher. We already know that. It's already up a little bit, as we saw on the futures. But individual stocks are pushing high. So there's lots of dollar movers and dollar shakers. Looking down the list, just looking for the big, Zoom's been doing, about 100,000 shares. So this is a light volume for Zoom, although it's doing 50,000. NTES post earnings, we've got nearly 200,000 shares traded. So there's a few interesting stocks. I'm not really seeing lots of 100,000 shares and the big dollar movements, but we've got 3 or 4 that look interesting. Again, I'm not going to look at them just yet. I'm just showing you what I typically look at and how I view things. I'm now going to sort as a percentage. And again, I'm looking for anything over 2% is what I'm looking at. So although I've looked at just sorted the dollar stocks, the dollar movers, not everything is a big percentage. So by sorting then as a percentage, looking for 2% or more, been a little bit flexible. There's only about 7 stocks. So although I've got a big universe of stocks that are in my universe, again, about 350, 400, somewhere around there, there's only 7 that are possibly interesting. And then you look at the pre-market volume. We've got 100,000 shares traded on Workday. I've popped that on my list. That looks really interesting. It's down $9, which is about 4% of the stock. Earnings was yesterday, and we've got 100,000 shares traded. That looks really interesting. That's what catches my attention. Let me just pause there. Does this scan make sense? Does everyone kind of see what I see? It is interpretation, but at the same time, it's pretty mechanical and pretty straightforward. Has this stock moved? Yes. Has it moved by a big percentage? Yes. Is there a news trigger? That's what this is. So -1 is there's a news event. That's more of a bonus. It's not essential. We know that there's earnings. It could be moving because of a different reason. I'm not going to go and search the news, but if there's a big movement as a dollar amount or as a percentage amount, then it might just signify that there's going to continue to be interesting things happen. And then when we confirm with volume, well, that's probably going to be a real gap, because although these stocks gap, if there's no volume to support the move, then at the opening bell, to be fair, I'll see if I can come back to it if I'm not kind of catch myself rambling and talking. If we watch these stocks at the opening bell, then what you'll see is a lot of these reds might turn to gray, neutral. They open where they closed yesterday, or they might turn bullish. They actually end up opening higher than they open. So another reason for looking for this volume is that, well, this gap's probably going to be a real gap. It's not just one rogue trade that's just pushed price higher in the pre-market. It's actually traded there. Now, the other thing that we can start doing is to reaffirm that these gaps are real. And again, so we're not looking at every stock every day, all of the time. And we're on the clock here. I'm looking for 3 or 4 stocks that are interesting in the day trade. Then I can go and click on something like Workday. And then this means that because I've got the pre and the post markets on, this is the 5-minute chart on the bottom left, but I can see post market, we have the earnings announcements, and I'm just outlining the price activity so you can see it's dark shaded. It might not be presenting well, but you can see that there's a lot of pre and post market trading. So this $9 and $9 move and the 4.2% gap, that's probably real. It's genuinely trading in the pre and the post markets. Whereas we go and look at something that is SWK here, number 7. It's had 100 shares traded in the pre-market so far. It's looking like it's going to gap 2%, but with 100 shares traded, it may open there. But you can see that there is no pre or post-market trading activity. So yeah, sure, it might still gap 4%. My apologies, 2%, but with 100 shares traded in the pre-markets, and usually we see 1 million shares traded on average in a day, there's probably not that much institutional interest. There may be some good activity as the market opens, but then I'm resorting to the fact of, well, if I start including this in my potential watch lists, I'm then falling into the trap of looking at every stock every day, all of the time. And I don't want to do that. I'm just trying to zero in on what is the potential mover and shaker for the day. And those are the scans that you can do when the market opens, but I'm just trying to give myself 5 or 6 things that look interesting. Again, just going back to Workday, I'm looking now. The visual inspection is, do we have pre and post market activity? Actually, Workday looks really interesting. So I'm going to go to my main day trading layouts. I'm going to add it to my today only section. I've got my list of stocks, which I normally look at on a regular basis, my core list, for want of a better description. And you can see I've already got it added there, Workday. I've got it on my watch list for today only. So that's what I'm going to do. I'm only looking for 4 or 5 things. I don't want to have lots of opportunity. And all I'm really looking for is 1, maybe 2 good day trading opportunities. That's it. So I can, again, just looking down, Gild, Gild Sciences, I can see that we have pre-market, big move, consolidation. There it is, just outlining the move. I'm just reading your comment, Paul. EA is to Sean as work days. Yeah. So you don't like work days, what I'm reading there. You've got a hate relationship with a work day. Well, if there's ever a reason to short it then, Paul, then today's the day. We've all got just Paul's just put in a comment about, like, we've all got favorite stocks and stocks that we hate. They've all been bad to us. And EA is Paul's stocks. Workday's yours. EA is Sean's, one of my business partners. And for me, it's actually the currency. It's the Japanese yen for me that I've had my worst trading experiences on the Japanese yen. And there's no rhyme or reason. I just can't trade it. And there's no logical reason other than I've just had some of the biggest cock-ups ever in my trading career. The two biggest ones were on the Japanese yen and the dollar Swiss when I was trading currencies years ago. And I just can't bring myself to trade them. It's a psychological hiccup. So there's plenty of things for us to trade. There's no reason for it practically. They trade well. Anyway, Gilead looking good. We've got where I derailed myself. 100,000 shares traded, 9 million normally traded. It's going to drop about $1, 1.6%. It looks good. It looks like it's gapping below these horizontal red lines there. That's the prior day's low. So that could be interesting. That could be significant. Looking at the 60-minute chart, do we have, price jumping past support or resistance? Well, it's jumping past the prior day's low. There's a little bit of a speed bump there at 59. There's a little bit of a speed bump at 58. So it's got a little bit of a hiccup to go. The other thing that it's got in its favor is on the daily chart. It's in a downtrend. It's gapping below the previous day. So that could be interesting for a move down. So one of the things that I'm thinking about is, although this is on my gapper list, the gapping stock list, this might be a candidate for a swing trade. It's jumping past prior days low. So if this was to set up and give me a nice intraday entry in the first 20, 30 minutes of the trading day, then there may be an opportunity to add on a swing trade. So that's one possibility. And the main reason being is we're in a nice, well-established downtrend, and this is a rally in a downtrend. It's a candidate. It's a possibility. It's just something that I'm thinking about. It's not essential. But I could also be thinking about this for a swing trade as well. So we can use day trade scans to find swing trade opportunities. So that's a candidate. Let's check out FE. It's down 1.9, nearly 2%. 120,000 shares traded in the pre-markets. It's nibbled the previous day's lows. So we've got the gap down, just drawing it there. We can see that it's going nicely. The thing that catches my attention on First Energy is, similarly, it's down a little bit sideways, and we're just back below. I'm kind of forcing the trade there. It's not really that interesting. I'd like to see price jump beyond the prior day's low or the prior week's low. It could be interesting, but we're certainly not seeing anything to get excited about. Just going back to Workday, I think Workday is my favorites on the bearish side. We've got Gilead close second. FE, again, not that much pre-market trading, despite the fact that we've got 100,000 shares. Maybe we trade it, maybe we come back to it. The gap is not quite 2%. Let's sort the percentage changes the other way. And again, I'm looking for that 2% gap. There's only really 6 stocks to look at. There's certainly other dollar stocks. Just casting my eye down the pre-market volume, Square catches my attention. So it's not a big percentage, but it is a big dollar. So maybe I'll just take a little look at that one. Again, reasonable amount of activity. It's still inside last week's high-low range. It's not quite gapping above the previous day's range. So again, not that exciting. I'm just looking for something that is potentially going to gap and go. Ross Stores catches my attention, mainly because we've got that earnings. We've got earnings, 79,000, not quite 100,000 shares, but we only normally see about 2 million shares traded. So it's going to be gapping $4, which is a little over 4%. And again, pre-market, can everyone see that? Again, it's a little bit shaded. Look at it on your own data, but we've got a lot of post-market data yesterday and pre-market trading today. It's looking interesting. And again, that level corresponds to there, the pre-market. So just looking at the daily charts. So it's already had some interesting gaps and moves and ebbs and flows. It could be interesting if we can get above prior day's highs. And again, the 60-minute chart, if I'll draw it on the 5-minute. You've got this big thrust move. You've got the pullback there. The market's just opened. So I've already been talking. So it could be interesting. If we get above that pre-market, that could be quite nice. Let me just have a little look. There was one other one. NTES was the other one I was going to look at as well. Now, NTES earnings news up 3% on the open, 200,000 shares traded as we've just hit go on the markets. We've got a lot of mess here on the daily charts. So that catches my attention. If it was going to gap and go, it's got a lot of speed bumps to get through. You can see that on the 60-minute charts. You know, you've got multiple pivots or swing highs to get through. It doesn't mean that it can't go and go hard and fast. It just means, you know, this is probably going to be a little bit of a problem. Probably going to be a problem. So anyway, that's how I'm finding the stocks. Can everyone see that we had the bullish side? Lots of those are turning red and bearish. So just because we have a pre-market gap as a dollar or a percentage doesn't mean at the open we'll see a gap. That's why we're looking at the pre-market volume and then go and look at those charts to see if there is trading activity. So when we come back to rosters, we can see that there's a lot of pre and post market trading activity. So that's the sort of thing that we want. So let's just take a look at the stocks that I have interesting. So we've got Workday was the candidates. We're through yesterday's low. So big chart, 5 minutes, daily's up here now, 60s bottom left. So we're breaking through out of that consolidation. We've gone from a bullish buy yesterday and we're gapping below. Anyone who got long is just being stopped out probably, which is quite interesting. Breaking through the pre-markets. So that's a nice sign that I like to see. And we're going through yesterday's low. So we've got a good indication that this could gap and go. Where could it get to? Price swing lows on the dailies. So 210, 200. So if there could be a big move on the table here, we'll find out in 20 minutes, which is my time-based entry. And we'll see what we see. The other stock that I like, Alibaba, something I've been watching. It had some pre-market interest, as you can see there. Lowe's is the other one. This was on the list from earlier in the week. We've got a big news gap there, gapping through prior. I think we mentioned it earlier in the week on some member commentaries, but we've got a big gap inside day yesterday, narrow ranging day. I think if we can get that push through the week's low as opposed to yesterday's low, so the low from Wednesday, so that low there. So if we can get through there, then there could be a good swing trade. And that's why I'm keeping an eye on lows. Why? This had a huge news driver yesterday. Similar type of setup, big directional move. Yesterday was a narrow range or an inside day. If that can break ideally to the downside in line with that big thrust, there could be a nice swing trade. Even if it just gets to Wednesday's low, that could be a $10 to $15 move. That would be a nice day trade. There's nothing in its way. If you look at the 60-minute charts, if it gets through yesterday's low, there's nothing in its way down to Wednesday's low. So it could be interesting. Workday, we're back again, just going down my list. Like to see some movement there. JD is one that I'm watching. We had that pre-market volume. We can see it there, a little bit of pre-market activity. 60-minute chart, now that I'm looking at this in more detail, we've got a little bit of a consolidation. We're seeing that a lot this week and last week on many stocks. So if we can get through that, that could be a better indication for a breakout move. If we get the pattern that I normally look for, which I'll find out at the turn of the hour, then that's going to be great for me. BA was highlighting. That's been on and off the list several times. Lots of pre-market activity, post-market activity there, pre-market there. And again, it has been on and off the list for the last 1 to 2 weeks. And then finishing on Ross Stores, It's gapping higher, but trading lower for the moment. I'd like to see a trade in the direction of the gap, which is bullish. That's ultimately what I'd like to see, and we'll basically see if we get it. I've got my core list of stocks as well. Apple is moving lower for the moment. It's okay. Microsoft's moving lower for the moment. Most of these stocks are stocks that I'd check on a regular daily basis. They usually set up something interesting if the gapping stocks don't, and everything's looking great for the moment. So we've got a nice little opening bell action. It looks like we're negative on tech. Just scrolling up, looking at the top left, we can see that the market, funnily enough, the market was moving higher in a small way in the pre-market, as we noticed when we're looking at the futures, but now it looks like it's going to be a gap higher, trade lower type of day. Dow's taken a beating, down 0.5%, $1.50. Russell, despite the strength that we were commenting on, that's on its heels following. So Nasdaq, for a change, having some strength. So I think Nasdaq's generally having strength because we've got as you can see here on Nvidia, we've had a lot of tech consolidations in the last week. So the gap high, gap lower by a small amount. It's not really doing anything new, is how we would phrase that. So we really need to see price break out one way or the other. And again, you'll see that same setup as you go through. Again, just going back through, focus on the chart on the bottom left. You can see the consolidations on many of the time frame. Many of the stocks that are kind of industry leaders, household names. But yeah, it's looking like a slow day. It's been a slow week generally. So that's what I'm thinking about. I've got nothing to do right now from a day trade point of view. The time-based entry for me is going to be in 25 minutes as I'm doing this. The opening bell looks interesting, but I've got a nice short list of stocks to look at. And if I wasn't doing this would be a time where I would take a break, have a Kit Kat, go and top up my coffee and see what presents itself from a setup. Again, I'm on 5-minute charts. The setup that I prefer to use, you'll see it on 1 minute, you'll see it on 5 minutes, you'll see it on 3 minutes, 2 minutes. It's on any time frame. I like to use it on 5-minute charts because it gives me plenty of thinking time. I don't have to panic. It means that I can do sessions like this with students, either in a group environment or one-on-one. It gives me plenty of thinking time to talk through the setups. The setup I like to use takes about 20 minutes as an absolute minimum to develop. Which is why I reference 10 a.m. Eastern all the time. At 10 a.m. Eastern, the setup will be there or not there. I'm going to go back to Workday, actually. Workday is, if we were to put a 1-minute chart on, you'll see we'll possibly put the 2-minute chart on. You can see the setup there. You've got a nice push. You've got a nice pullback. It looks like it's going to drop down. I want to see it on the 5-minute charts. There's a few other reasons for that, but the main one is just nice leisurely pace of day. If you want the fast time frame on the 1 or the 2-minute charts, certainly the setups are certainly there as well. So with that said, let's go back to the big charts. We're back on the dailies, and we've scanned for day trade stocks. I've got 20 minutes now before my first entry possibility is available. Why the 5-minute charts? Why the 5-minute charts? So if the setup's on the 2-minute chart, why the 5-minute charts? I'm planning on using options as opposed to trading stock. A couple of reasons for that, mainly because of it's less capital intensive. I can trade multiple stocks. I can get more leverage. I'm also looking for the main move of the morning, which is why I want the 5-minute chart. So I'll have maybe anywhere from a 30 to 60-minute trade, and that will take me up to that main move of the morning. So that's why the 5-minute charts. I don't really want to scalp on a 2-minute chart. I don't mind doing it. I have done it. I spent 12 years doing it. So it is possible to do it. It's just I'd rather not do it. And it's just a personal preference. It comes down to that. That's really all it comes down to. So why the 5-minute chart? I want the main move of the morning. If you just want the main move of the hour, trade the 2-minute chart. If you want the main move of the morning, trade the 5-minute chart. If you want the main move of the day, trade the 15 or the 30-minute chart. All comes down to objectives as to, why do we choose the time frame that we choose? Predominantly, it's objective. What are you trying to achieve? So that's why the 5-minute chart anyway. I'm looking for the main move of the morning. I'm not looking for a quick fire in and out on 2 or 3 minutes. If that's what you want, trade the 2-minute chart and be done and dusted in the first 30 to 60 minutes. Anyway, let's think about swing trades. We found 1 or 2 swing trades which could be interesting from the gapping setup. Now, what I would do with those is at the top here, I've just got a little section for discretionaries. That's where these stocks come from. I'll just add them to my, oh, that looks interesting. And already I've forgotten what the swing trade was. It was Gilead, wasn't it? It was the swing trade. So I'm just going to add Guild to the swing trade and let's evaluate that on the dailies. So we've got a nice average prices are crossed over. We're below the 200. We're below the 50 period. Visually, we've got a nice trend. We've got a rally in a downtrend. Lovely, almost like a crowning top. We've got lovely horizontal highs there. Looking left, that price support acting as resistance. So that looks like a great location to be thinking about. Maybe this could be a good swing trade. So if I can find a nice little day trade entry, that could get me positioned on the swing trade. So Gilead looking good. For the moment, it's just gapping below that swing low. There's the first 60-minute bar of the day. So it's just pushing high. I'd be looking for price to turn around. And again, maybe I'll get that on the day trade entry later. I don't need to worry about it right now. So the usual scan for me is to look down this column here. I'm just going to overshade it. But what I'm looking for the swing trade and my usual core list of stocks is these little yellow indications. This for me is referencing this indicator over here. This is a percentage R. We've spoken at length about it in the past. And what I want to do is look at those charts that have that yellow indication, because that means that, hey, I've got a brand new, this looks interesting setup. It's doing something from a mechanical point of view that I'd like to see. So that yellow one there means that CRM, the ticker symbol, is doing something interesting that draws my attention to it. I can see that we've got blue, blue, blue. So what that means is we've got price bullish on the averages, above the 200 period moving average, above the 50 period moving average. I can see we've got earnings in 11 days. But right now, it's also in the top 20% of its rolling range. So from a mechanical evaluation, the indicators, the tools that I like to use to help me make evaluations, they're all saying that CRM's going up. So when I go and click on that chart, I want to visually confirm that that is what I'm seeing. So here's what we saw. Average price, so that's what this blue, blue, blue is. Awesome, Paul. Awesome. Paul's just mentioned that you got long CRM yesterday. So average prices are up. We're above the 200. We're above the 50. That's what this column here was telling us. Blue, blue, blue. This yellow bull is telling me that right here, percentage R is in the top 20% of its rolling range. That's great. When price stays in the top 20% of its rolling range, that could be a good indication of a strong trend. So now that I'm looking at this chart, so that was the mechanical evaluation. So now that I'm looking at this visually, I can see that, yeah, we are in an uptrend. Visually, I can see in the short term, in the last 2 to 3 months, there's a consolidation. Now, this tool here is saying that we're in the top 20% of its rolling range. It's only looking back over 30 days, but visually, I can see that over 60 to 90 days, that we're in a consolidation. So I want to confirm what the tool's saying always visually. So now that I'm doing that, I can see that I'm still in this short-term consolidation. So my choices are confirm that price is in a range. Great. I know what to do with that. There's 6 ways that I can trade. Buy the dip, sell the rally, and the next 4 are in relation to a range. Buy range low, sell range high, buy the break of range high, sell the break of range low. Now, because I'm in an uptrend, I'm going to be thinking, buy the break of the range high or the break of the range low. So right now, for me personally, I'm in the middle of a range. It's not where I want to get involved. It doesn't mean that it will provide a bad opportunity. It just means that it's not where I want it. It comes down to objectives. So there is an opportunity to trade CRM, Salesforce, For me personally, I'm waiting to see price at the range low or at the range high. I'm going to buy range lows and buy the break of range highs. Similar example, we've spoken about this a few times, just so you can see what it looks like, is that Netflix. Netflix is a stock that I'm looking for in the same way. You can see that same thing. So we've got visually trend is going up, mechanically trend is going up, but we've got this range. So right now, price is at the range low. We've been speaking about this the last few weeks. I'm looking to be placing trades, multiple trades on this actually, but that's what I'm looking for. I'm at the range low. And can you see that kind of V-shaped pattern there? That's what I'm looking for. If you need help with this, this is where percentage R can be useful. You can see you've got that V-shaped pattern there. And what I'm interested in, because I'm bullish, I'm looking for a break of that apex. So just find the corresponding point on the chart. If it goes above $500, I'm going to be in that trade, and I'm going to trade it from the range low to the range high. Why? Because price is in a range, nothing new is developing, and all I'm looking for is for history to repeat itself. And I'm just waiting for my go indication. So go for me on this chart would be above the apex. If it goes below the range, trades off, wait for a new entry setup. Does that make sense? Is everyone kind of clear on what makes a go trade for me? Again, this is a swing trade. And this is a range reversal in the context of the long-term trends. That's what I'd be looking for. Let's take a look at some of the other stocks that have that bullish indication. I'm looking at BYD. This is Boyd Gaming. Make sure I'm looking at enough data. There we go. I want to make sure always that I have 12 to 15 months. So on my time horizon, on my date, I want to make sure that I've got 12 to 15 months so that I can evaluate what the trend is. I'm always trying to evaluate because that's important from a visual point of view. Most time, and at the moment, I'm discounting the crash. So I'm, for the moment, going from April onwards. From April onwards, it's going up. We're in the top 20% of the rolling range, and we're back in it again. I'd like to see price retrace. I missed the opportunity. I wasn't planning on taking new swing trades on prior to the election, so it's a little bit frustrating, just the nature of the beast. But it's breaking to a new high. I would like to see price retrace. We've spoken about this, waiting for the retracements. Similarly with XPO, because it's a little bit of a sloppy, messy chart. We've had some good trades on this, but I'd like to see price retrace back closer to that 50-period moving average. That would be ideal. Again, missed out on the opportunity prior to the election. Again, that was a conscious choice, so I'm not overly concerned about it. Let's check out AMD. It's in a bullish trend. We're in the top 20% of its rolling range. So there's the 20% of the rolling range. Visually, it's going up. Short term, we've got a consolidation. And what I'm waiting for, we're in the top 20% of the rolling range. So, but we're not yet breaking out of that range. So I've got two choices. I can wait for the break of the range, wait for price to be at the range low. And because we've got a well-defined range, one of the choices that we have is if you've got a little bit more time available. This is a 60-minute chart. So if you have a little bit more time available, then what you can start thinking about is, well, I've found a consolidation on the daily. And on the daily chart, it's not necessarily tradable because we're looking to buy, dip, sell, rallies, range lows, etc. And I can start to say things like, well, now that I know what phase of movement price is in, if I've got a little bit more time available, then I can drop down to a 60-minute chart and trade the range because I want price to be at the range low or above the range high. So as I'm going to trade the breakout for the swing trade, and that swing trade might last anywhere from 30 to 90 days, between 1 and 3 months. But because I'm on the 60-minute chart, maybe I can get a short-term trade that might last between 1 and 3 weeks. So 1 and 3 weeks and 1 and 3 months. So there's always 1 and 3. So 60-minute chart, I could get that 1 to 3 weeks. Daily chart, I could get that 1 to 3 months. but I've still recognized what's the phase right now. This is in a range. Where is it? It's at the upper end of the range. I'd like to be a buyer for the swing trade when we're down at $74. So could I have a get paid weekly version of the strategy, again, between 1 and 3 weeks? Could I trade that down from the range high to the range low? So what would need to happen? I'd like to see one of those reversal pullbacks. I'd like to see, you can see an example there. There's the V-shaped patterns there. We've got a little V-shaped pattern there. We've got V-shaped pattern there. I'm just going to the highs. We've got the V-shaped patterns all over the chart. A little bit of a consolidation. There's the breakouts. So what we're looking for are those similar shape of patterns. So this now is a shorter term opportunity. And I found this from the swing trade. So I've got my day trade setups, and I found a swing trade from the day trade scan. During the course of my swing trade scan, I found still a swing trade, but with a different possible time horizon. I'm thinking if I drop down to the 60s, it's 1 to 3 weeks. And that will help get me set up for the daily swing trade, which might last 1 to 3 months. Let me pause there. This is a little bit inception. This requires mental juggling because I'm running multiple versions of the same strategy. Everything we've spoken about is the same strategy. I'll say it again. It's the same strategy. It's just I'm running that production line that I have, at the very least mentally, through where's the opportunity? Where's the opportunity? All I'm looking for is to recognize the phase. You know, basically, what's the trend? And is there a trading opportunity? So the 4 stages are mechanical trend. Like find a mechanical reason to look at the chart. And then number 2 is visual confirmation. And that's what I'm going to spend more time on, because when I've got that visual confirmation, and visually it's that trend, it's either going up, down, or sideways. Is it in an uptrend, a downtrend, or a range? And when you know what's going on visually, then you can construct a trading plan. Great. Where's my entry? Number 3, trade the pullback. And it could be a breakout pullback on a range or on range breakouts, up or down. It could be buy the dip in an uptrend. Another way of saying buy the dip is a pullback. In this case, we're in a range. So I want to see price reversing off these range highs and range lows. So as price comes down to the range low, I'm going to look for those prior swing points. The apex is how I usually refer to them. I can be a buyer above the break of the last apex when we're at the range low. So we're close to the range high. The last apex is there. That's a little bit too far into the range for me. I wouldn't like to take it on. I'd like to see some reversal develop higher up. And then I can trade that down to 76, 74 level, which would be perfect for the swing trade. So step number 4 is the trade management. It's going to time out, target out, or exit out. If I'm going to place a trade on AMD right now, the timeout would be, I'm looking for a trade to last 1 to 3 weeks. If we're in week 4, it's going to time out. If we're at $74, 75 sort of zone, it's going to target out. And if it goes higher and goes above that 88, 90 zone, maybe I close it out. It's going to exit out. So we've got 3 ways to manage the trade. And this is, broadly speaking, the production line. And it's the same production line that we have, the same evaluation, the same tool set that we're using all the time, whatever the strategies, whatever the time frame is. Daily charts, again, let's look at, I'm looking for trades that last for 1 to 3 months. 60-minute charts, I'm looking for trades that last 1 to 3 weeks. And 5-minute charts, I'm going to say 1 to 3 hours. It's up to about 90 minutes. So it's actually split down to 30, 60, 90. So one to three 30-minute blocks is how I do it. So, let's just say 1 to 3 hours. So 5-minute chart, that's what I'm looking for. It usually lasts 1 hour, maybe up to 90 minutes. But let's just say 1 to 3. Can everyone see this? It's the same logic, but when you switch a time frame, you've got a different time horizon. And this is one of the things that we regularly talk about. Define the time horizon. When you're looking at the trends, define the time horizon, define the time horizon. And it's the same thing with the trade. What's the time horizon for the trade? If I'm on the daily charts, I need a good time horizon. It's 1 to 3 months, 60-minute chart, 1 to 3 weeks, 5-minute chart, let's just say 1 to 3 hours. But, it's 3 30-minute blocks is how I usually do it. Let me pause there, folks. Does this make sense? Does this help? Does this help anyone? Does it confuse things? But this is 3 strategies run concurrently. Awesome. Oh, this might fall under the category of, I'm always reluctant to use the word advanced. Yeah, I'm always reluctant to use the word advanced. It's not advanced. It's just that I'm doing multiple things at the same time. That's it. That's all I'm doing. Multiple things at the same time. Previously, we would normally focus on just one thing at a time. But when you get used to this, it's like if anyone's ever learned how to juggle, you might start tossing one ball from one hand to the other, get used to the feel of throwing one ball from one hand to the other. Then you would use 2 balls, juggle 2 balls in one hand, juggling from one to the other. And then you'll introduce a 3rd ball. And then you start juggling, and you're going to drop them every now and again. That's fine. I certainly did when I learned. I did teach myself to juggle. I've not tried 4 balls, but it's the same principle. When you get used to 3 becomes easy. Another metaphor I like is learn how to drive. When you first learned how to drive a car, think back in time to those nervous days. You're young, you're inexperienced in life as well as driving, but there was a lot to do. It wasn't complex. At all. It was just that there was a lot to do. Mirror, signal, maneuver, clutch. If you're in the US, you probably learned how to stick shift or didn't learn how to stick shift. But you've got multiple things to do. You've got to remember. Then you've got to remember to indicate at the right moments. You've got to stay in the lane. You've got to not bump into people. All sorts of weird shit goes on. But fast forward to now, your current situation, you don't think about it. It's not a conscious efforts to juggle multiple things. You just do it automatically because you've got the checklist. I need to turn left in 20 minutes. Great. So, you keep an eye out for the turning, and at a suitable point before you have to turn, you would indicate, you slow down, you change lanes if necessary, and then you turn left. It's the same thing. You don't think about it. You just automatically do it. And this is what I'm trying to illustrate now. It's like, when you start to push the boundaries, you can start running multiple production lines concurrently. And this is where I'm currently at with trying to bring you up to speed with where I am at the moment. So lastly, so this is 2 scans. We've done the day trade scan. We've done the swing trade scan, and a little bit of overlap between the 2. We found something that could be interesting for a get paid weekly version of the swing trade. Let's think about theta. So one of the things that we get to do as option traders is we get to say things like, I don't think that this is going up. So a good example is Verizon. Verizon is a stock that is for years, this is the weekly charts. For years, it's done nothing. It's kind of an upward drift. This is 2011, all the way here on the left. This is obviously 2020. But you can see that it does sweet Fanny Adams. Typically, historically, it does nothing. Now let's look at the percentage R. This is the same indicator that we use, the same tool with the same setting. And what we know is that this doesn't spend a lot of time in its top 20% of its rolling range. So this is not a strongly trending stock. I'm emphasizing the not. So I can use the same, it's in the top 20% of its rolling range, but instead of looking for a trend, I can say, I'm not looking for a trend. I would like it if this didn't go up. So what that means is right now we're in the top 20% of the rolling range. Visually, same process. Mechanical reason, look at the chart. Visual reason, confirm what we're expecting to see. I'm planning on selling options and collecting an income. This is in a range, a multi-year range at that. It's at the upper end of its range. I don't necessarily think that the stock is going lower. It might do. I don't care if it does. But what I can say is I am not bullish. Not bullish. And what I mean by that is it's the opposite. It's the opposite to bullish. The opposite to bullish doesn't mean that I'm bearish. The opposite to bullish is not bullish. So I can sell calls. The timing for that is the exact opposite to the trend trade. So there's the trend. We're in the top 20% of the rolling range. Yay, price is above the 200. It's above the 50. There's the pullback. We're in the top end of the range. Yay. I don't think there's a good dollar movement to the downside. You can see on the dailies, it pauses for days, weeks, even months at a time. We've already established that this is a shitty stock. That's great. I'm not going to be a directional trader. I don't need to profit from a bearish downward movement. I can sell calls and I can be not bullish. When would the timing of that happen? When I move out of the top 20% of my rolling range. Did everyone see that? We've just gone out of it today. We've already got the V-shaped pattern that we like. We've got a chart pattern, but we're now outside of that top 20%. We're in the bottom 80% of its rolling range. I'm thinking today's a good day to sell some calls. I can sell call spreads, collect some income. If price moves lower and I do see a directional move, I'll get paid quicker. But you know what? I don't need it to move. So what I've got here is, this is the same indicator on the left, the same percentage R tool. I don't know if you can read that, but it says bull over. That tells me that it's moved out of the top 20% of its rolling range. This is a custom tool. So I can just scan down. I don't want to spend all day, every day looking through charts. I've got dicks. Talking of balls, Colin likes dicks, apparently. Conveniently, we've got a bear over. So this is in the bottom 20% of its rolling range. Broadly speaking, it's in an uptrend. I can see that. I don't know if it's a good stock, but what I do know is this doesn't trend strongly. So now that we see that, despite the trend, despite that, we are actually seeing a trend. We've got that V-shaped pattern there. We've got the moving out of the range. I think I've missed this one, if I'm going to be honest. I think I've missed this one. So Colin, if you got that yesterday, that's awesome. Personally, I think I've missed it. I would like to have, there's the V on the indicator. Don't quite see the V on the charts, but nonetheless doesn't mean it's not there. I'd like to sell some options, but I think selling puts in this case, I've just missed the boat. That's okay. I'll get the next one. So casting my eyes down, I've got, again, a few stocks that are in the top and bottom 20%. Yum is just going into the top 20% of its rolling range. These are stocks that typically don't usually move that much, or if they do move, again, looking at the weekly charts more than anything, it tends to oscillate back and forth. We're in this range. This was a stock that we looked at last week. I've got a generally neutral to bearish viewpoint on the markets. And if it went below that, we do have a couple of V's there. So if it goes below the apex, then I'm going to be potentially bearish, waiting for my entry to develop on that. So I quite like those type of stocks. We've got another bear over here. So, oh, that's Dix. What else have we got? Let's check out Sony. Sony's a brand new. It's just gone into the top 20%. So what I can do is keep an eye on it. I'm looking for the failure of the trend. I'm looking for the failure of the breakout. Oh my giddy ants, look at this. This looks awful. Would you want to trade the trend on this stock? Look at this. This is it's not Sony, it's not Sony, SNY, Sanofi Aventis. This looks absolutely awful. Would you want to trade that stock? From a trend point of view, probably not. Not that interested in it. But you know what? I don't need to worry about it. I can be not bullish. The percentage R has developed that little apex. Let's find the corresponding point on the chart right there. So if this goes below $50, maybe I can be not bullish and I can sell calls or call spreads. That's what I'm planning on doing. So SNY, I don't know why I kept saying Sony, Sanofi Aventis. It looks horrible. It's an awful chart. I don't want to trade the trend on this, but that's okay. That's what income trading is all about. I'm not bullish. I'm not bearish. I don't want it to go anywhere. In fact, I'd like it if it continued to do nothing. So this is how we can use the same tools. And all we've done in each occasion is change the objective. Daily charts, find stocks that historically and classically and traditionally swing nicely. Same with the day trading opportunities. Historically and classically are explosive movements, usually gapping stocks. Maybe there's a short-term trading opportunity. And then the exact opposites for income trading, for selling premium, for collecting, taking advantage of the theta or time decay. And it's the same process. I'm looking for a trend indication to say, look at the chart, but I don't want the trend to actually unfold. I'd like it to failure. So this is a great example. The same tools that we use can be used for day trading, swing trading, short-term swing trading, and income trading. And this is how we do it. That's it, folks. That's all I've got to say on the subject. We're just a few minutes over this week. No change there, no surprise for all our old hands. But that is green light trading, finding stocks 3 different ways, day trading stocks, swing trading 2 ways, swing trading with 1 to 3 month time horizon, swing trading with a 1 to 3 week time horizon. And we've got a income trading scan, again, finding stocks that are absolutely awful. And then we can sell options and collect an income against it. So 3 strategies, directional trades, day trades, or directional swings, day trades, and income trading. So scanning for stocks, 3 different ways, no change in tools, the exact same production line, mechanical reason to look at the chart, visual inspection and confirmation, trade the next pullback. I refer to those V-shaped patterns, trade the next pullback or the last pullback, or a reversal pullback. And then trade management. The step number 4 is, time out, target out, or exit out. And depending on what we're doing with the trade, it's going to do one of those 3 things. And the only difference between the production line is our objective for the trade. Objective being I'm trading directionally, or I'm selling options, or I'm day trading. So that's it, folks. Once again, thank you all for your time. Thank you for your attention. I see that there's 1 or 2 questions again in the chat box. So as usual, I'll hang around and answer those questions that need a private answer privately. But that's it. That's the green light trading, how to find things to trade on a regular, daily, consistent basis. It took us an hour to explain. The reality is it takes 20-30 minutes to do. So it's not time intensive. A lot of these things can be done at any time during the day. You don't have to do it when the market's open. But yeah, you can certainly fit a lot of these things around your regular daily schedule. Right, folks. Again, thank you for your time. Thank you for your attention. A shameless pitch at my latest strategy. You heard me mention that we have an active day trading strategy. If you'd like to learn a little bit more about the profiting from moves in the first hour of the day, then by all means send me a message if you'd like to learn more about it. I don't have yet a dedicated information page other than the information that's here. Basically, you can find stocks that are in the best stocks to trade, the best times to trade. I've shown you how we do the scans on that, so you've already got the first part of that. We've got a simple pattern. We've got details of the trade management. So if you'd like to learn a little bit more about this strategy and to be done and dusted with the day trading side in the first 60 to 90 minutes of the day, send me an email, phil@antivestor.com, and we'll see if that's the right thing for you. And if it is, great. And if it's not, I'll always try and point you off in the right direction. So with that said, once again, thank you for your time. Thank you for your attention. That was Greenlight Trading, how to find something to trade every day, whatever your objective is, whether it's day trading, swing trading, or income trading. Thank you for your comments, Jacob. Thank you, Rodrigo. Thank you, Colin, Adrian, everyone. Thank you for your time. Brian, Duncan, Ezekiel, Gilbert, Ian. Hello, Ian. I forgot to mention you earlier. Kyle, Angel, Lloyd, hello Lloyd, Rodrigo, Sean, hopefully you enjoyed your session, Sean. Scott, thank you. Vito, always bottom of the list. Vito, it's not your fault that you've got a name beginning with V. It's not personal, it's just that you're at the bottom of the list. Thank you for your time, thank you for your attention. I'll see you at the same time, same place next week. Whatever you're up to, make sure that you have a good weekend. Find a reason to smile and enjoy yourself, especially at the time. I think happiness should be at the top of everyone's agenda at the moment. So make sure that you find some time to enjoy yourselves. And with that said, I'll stop the projection. I'm going to hang around for the next 5 to 10 minutes. If you've got questions, I see there's a few there. Please fire them away and I'll answer them in the next 5 to 10 minutes.